Right, so welcome colleagues to lecture 1 video B. So we're discussing, of course, in video A regarding to stage 2 in the purchases and payment cycles. Now I'm proceeding to explain stage 3 in the purchases and payment cycle. So stage 3 is what is happening. Now that from stage 2, now that you've placed the order for goods and services, the next step is obviously to receive the goods or the service that you have ordered or requested from the supplier. Now, so the objective behind receiving of goods and services, so in this particular stage, the responsible department, all right, they are responsible for receiving and accepting deliveries from suppliers, which matches against the valid purchase order and for record keeping purposes. That's what this particular function is all about. So it's about ensuring that they receive and accept deliveries, accurate deliveries for that matter, from the supplier. So if a delivery is accurate, it means that the goods that are being received from the supplier, they match against the contents in the purchase order form itself. All right. So now, what is the source of information for this? So obviously, there has to be a valid purchase order form in order for us to validate the delivery that is being received from the supplier. We can only do that if there's a valid purchase order. Remember, there's the valid purchase order we are referring to is the original that was initiated by these guys and sent to the supplier. Are we together? So now the supplier would only process the delivery to us on the basis of the valid purchase order that they've received from our procurement or purchasing department. So what documents do we expect to see in this stage during the receiving of goods or delivery from the supplier? We expect to see supporting documents in form of purchase requisition form, which we saw in stage 1. We also see the purchase order form, which we saw in stage number 2. But essentially, we also see another document being introduced, which is called a goods receive note. Goods receive note. Now, goods receive notes are essentially used as form of acknowledgement, record, or acknowledgement of acknowledgement of the goods that you have received from the supplier. So it acts also as a confirmation that, look, we have received the goods that you delivered to us. That's what the goods receive note is all about, right? Then, of course, flow of documents, we're going to see the original being sent to the supplier, all right, through the delivery driver, or we can simply email it directly to the supplier, right? So let me quickly show you the flow of documents with regards to receiving of goods. So like I said here, we see the use of goods received note, which is generated by the system. And what is the purpose of such a document? It is to act as a proof of receiving the goods. All right. So we are initiating this document, all right, and we are sending it to the driver that has delivered the goods, or we are just emailing it back to the supplier directly. But also at the same time, when the drivers are delivering the goods to us, there's just another document that omitted in the notes. It's called a delivery note. So when they deliver goods to you, all right, what happens is the delivery driver would have a copy, of course, of the order itself, but at the same time, there's the document that is received from the supplier through the driver, of course, which is called a delivery note. Right. So the delivery note it's supposed to be signed by the receiving party, which is in this case the organization. So, and that's what is happening during the receiving of goods process. So when we are receiving goods, we expect not only to see a goods received note, but we also expect to see delivery notes. Why am I saying delivery notes? Because we have to sign it as acknowledgement that, look, we've received the goods and we are accepting the goods that you have delivered to us. All right. But also on our side, we need to generate a goods received note, which also acts as in the similar purpose as well. And we send that to the supplier. Now, notice the goods received note, the original is sent to the supplier so that we can prove to them that, look, we've received the goods you've delivered to us and we acknowledge it to be a correct or an accurate delivery. Then there's a copy sent to the purchasing department. Let me show you. Okay, it's just not shown in the diagram, but it's fine. So there's a copy sent to the purchasing department. Now I want to revert back a bit. The purchasing department is found in stage 2. Remember, they're the ones that have initiated the purchase order with the supplier. So they are now receiving a goods received note. Why are they receiving a goods received note? So that they can have that as a confirmation that, look, the goods you have ordered for, they've been received. That's why the goods received note is sent to the purchasing department. Another copy goes to the accounting department. Why? Why is it important for the goods received note to be sent to the accounting department? So that there can be validation that, look, what you're paying for, because the accounts department will be involved in another stage where there will be payment for the goods that have been received from the supplier. So the goods received note would also act as a substantiating evidence that we have received the goods. So what you are paying for is you are paying for goods that were actually received by the organization. So it's possible that there can be goods that were never received by the organization, which could be paid for. The moment I see something like that as an auditor, I know that that one is a fictitious transaction. Why? Because why would the organization be paying for goods which have no validated evidence that they've actually been received? Because the only way we can know that they've been actually received, that is if we see a goods received note having been sent with other, of course, accompanying supporting documents, right? Because it doesn't just only work alone, because it's possible that the goods received notes can be fictitiously created. Why? Because these are internal documents. Somebody can tape around with that and just, forge those documents, and somewhat you discover that there's no goods that we actually received, but there's a fictitious goods received note. For us to know that it's a fictitious goods received note, that is if there is no any other accompanying supporting documents in the form of a requisition form, in the form of an order form, as mentioned earlier. Then, of course, there's another one that is maintained at the warehouse section. Like I said, this is the receiving section. So they maintain a copy there for record keeping purposes. Why is it so? Why is it like that? Because it could happen on a daily basis, especially a company that, that are into retail. They receive deliveries from suppliers almost on a daily basis, right? So we need to know what transpired in a particular day. How do we know? If we have a record that is being maintained daily, that's the only way we can be able to know what truly transpired in terms of deliveries received from the suppliers, right? So that is to conclude receiving of goods. And of course, the department involved here, it would obviously be, it would obviously be the warehouse department. To be more precise, the receiving section. Then, of course, there's stage 4, which deals with recording of purchases, right? So in the recording of purchases, this is just to ensure that the purchase transactions are captured in the financial records of the organization. So what would be the source of information for this? We can only record, all right, a purchase transaction if there is a valid invoice received from the supplier. So once we have sent that goods received note from stage number 3, there's going to be a supplier now, which a supplier invoice, which the supplier would then send to you. But sometimes they could do that ahead, while the drivers deliver the goods, then they would automatically send you the invoice. They would have already sent you the invoice ahead of time, right? So, but essentially, anyway, to follow the process, the blueprint, right? After goods have been received from the supplier, we then see the supplier invoice coming into the picture. Why? So that we know that what we are recording, what we are putting in our financial record, it is truly for goods that were invoiced by the supplier. And remember, it does not just only goes alone. I'm talking of the supplier invoice. It should be accompanied by supporting documents, which is every other document that have transpired from stage 1, 2, and stage number 3. So the supplier invoice, it cannot just only be used without those other supporting documents, which can act as verification documentation to what is being communicated in the supplier invoice. In other words, details of the supplier invoice and the details of the other supporting documents should correlate. The moment I'm seeing quantities are different, then I know that there's something wrong somehow. So there's possibilities that when a supplier invoice is sent, it could contain errors, all right? It could be containing maybe omissions sometimes. So it's very important to have supporting documentation so that you can be able to match the documents, the supporting documents, to the supplier invoice, right? To validate the transaction that is going to be captured in the accounting records, right? Then, of course, documents to unveil them, it's obviously going to be the supplier invoice. We're also going to see the supplier delivery note. Like I mentioned, it was supposed to have been received from stage 3 here when the driver came to deliver the goods to us. We also would see a purchase requisition form, which is part of the supporting documents. We also see the purchase order form, which is also part of the supporting documents, and the entry or the record transaction. It will be captured in the purchase journal. Very important to be recorded in the purchases journal, which is part of our accounting records. Now, which department, okay, the flow of document. Okay, okay, let me just first talk about the department involved. So the department of people involved would involve, in this case, the purchase department. We also see them involved. We see the warehouse department, the accounting department. We also see the accounts payable department. I'm going to show you the reason why. It's because of the flow of document on page 164 of your prescribed textbook. So let's quickly go to page 164 so that I can unveil that aspect. So if you look here on this particular, if you look here on the flow of document figure, notice from the warehouse area, what has happened? There's supporting documents that are received in the form of a purchase order. Now, there's also a requisition form, remember, that is accompanied to that. But not only do we get to see that, we also see a supplier delivery note, like I mentioned, which has been received from where? From the supplier themselves. So, of course, we need all these documents to be merged, all right? To be merged for what? For quality, quantity, and description, all right? In order to generate the goods received note, all right? So, but remember, this is taking place in the receiving section of the warehouse area. That's why you see that they say warehouse, and then they outline the steps that are taking place during the warehouse area, which is taking us, of course, to what we are now dealing with in the accounts department. So whatever you're seeing being captured from the supplier invoice, it is accounts department right there. So obviously, now that we have the goods received note, which has already been distributed to the supplier, of course, originally, and then there's another copy sent to the purchasing department to alert them that, look, the goods that you ordered, they've actually been received at the warehouse. That's why there's this copy sent to them. And then, of course, we also see a copy that is sent to the accounts department. That is what is the document of interest to us, because from that, all right, we'll be able to then generate our accounting record. So that is the flow of documents that is taking place during recording of a purchase. So there's quite a number of documents that will be used in that process. And there's also several sessions that are used. So that are aimed to be achieved. One of them is cutoff. Some of it is completeness, occurrence, of a transaction. Why? Because it's possible that you can record a transaction which is non-existent. How can it be considered non-existent? In other words, fictitious transaction. That is if there is no supporting document to back it up. So those are some of the things, especially with people that are into external auditing. Those are some of the things they'll be looking for when they are doing audit of annual financial statement, right? So in stage number 5, we now deal with the payment. Now that we have the record, the accounting record in our purchases journal, step number 5 deals with payment and recording of a credit purchase. Now, it's not only payment and recording of a credit purchase. Sometimes it can be a cash purchase, guys. Very important to take note of that. It can be a cash purchase. So it's not just limited to credit, but of course, under normal circumstances, sometimes we also procure or would buy goods or request for services on a credit arrangement basis. So that's why stage 5 is just titled payment and recording of credit purchase. What is the aim? What is the objective? To ensure that valid payments are made to avoid creditors, are paid to valid creditors of the organization. That is the objective of this stage, to ensure that valid payments are made only to valid creditors of the organization, or to valid suppliers of the organization in the case where we procured goods for cash. Sources of information, because we are dealing with credit, obviously, we need to look at creditors' statements, which are sent to us monthly for as long as we are owing the supplier. Then, of course, records we would see in that case when you are doing payments, you would see EFT receipts, all right? EFT slips, sorry, yeah, because receipts, normally it's when you've actually received money. So we see EFT slips being used to show as the evidence that you've actually paid a supplier out of your banking account. Checks also can be used, but not in this current modern days. That was, back then in the olden days. But of course, we also expect to see cash book records, because sometimes some of these payments, they are made for cash. So if you pay in cash, you'll be given a receipt, obviously. So that receipt is what is used to record the information in the cash book records of the organization. Then, of course, we also see the use of creditors' statements. We also see the supplier invoices. So all of these, from this bullet point up to the last one, these are just supporting documents from other previous stages. Because whatever you're going to have, to support the payments here, documents have to be matched. And when you do a payment, documents have to be canceled. It's very important, all right? Or they have to be stamped paid. That's what needs to happen, actually, right? So, and then, of course, the department actively involved in that case, it's the accounts department, and which is headed usually by the financial manager or the accountant. Then, of course, the flow of document, it can be exhibited from page 167. So I just want to explain a few things about that. Oh, so the one that I was explaining to you earlier, this was actually about receiving of goods. So the one I was supposed to have explained to you, of course, it was to do with the recording. So it is this one here. This is for the recording, this flow of documents. So just to, for the sake of emphasis, so we see the accounts department having received a goods received note. Remember, that came from the receiving department from the warehouse. And then, of course, we also see a copy of a purchase order that accompanies the goods received note. All of these documents are supposed to be matched against the supplier delivery note, which is coming from the supplier, and of course, the supplier invoice as well. So what are we supposed to do? We're supposed to agree these documents. In other words, match all these documents for accuracy in terms of quality, quantity, description, and prices of goods, right? Just so that we can ascertain that, okay, are we talking about the same order, or are these documents related to a different order? For that matter, it could be from a different supplier. So we can only know that if we agree or if we match the supporting documents. And all of this is taking place at the accounts department. And then, of course, after they've matched the document, they will capture the record in the journal, purchases journal in that case, right? So that was for the last stage. But now we are dealing with payment and recording of the credit purchase. So when the payment is done, right, how is the flow of documents going to look like? So from the supplier to accounts department, here's what's going to happen, right? At the accounts department, they are going to receive the invoice automatically, right? Indicating how much the organization is owing for the goods bought on credit. So what would the account people do? They will agree, they would match the supporting documents in form of the invoice received. So what do? They'll match the invoice to the original purchase order. I mean, a copy, sorry, because this is internal, right? So there's a copy. Remember, the original was sent already to the supplier. So there's a copy of the purchase order they would be having. I'm talking of the accounts department. And then there'll also be a goods received note copy that they'll be having in the accounts department together with the delivery notes. But the moment I'm talking of purchase order, just also know that there's a purchase requisition attached to that. It doesn't just go alone. So obviously, we match these documents, all right, before we can make any payment. Why? Because we might be paying for goods that were never received. We might be paying for goods that were never ordered by the organization. meaning to say we could be paying for goods belonging to another organization or to a non-existing entity in that case, and that is equivalent to fraudulent activity against the organization. So all of this has to take place. So it's a control measure, it's a control activity in this case to agree the invoice to the supporting purchase documentation or supporting documentation. So we agree those documents, and then on the basis that we have validated the details of these documents, then we can consider authorization of payment. Now, the authorization of payment, notice it has to be initiated by two signatories, at least two signatories. So it can be the financial accountant and maybe another person, all right, who is at a senior management level. So now when they authorize the payment, here's what happens, right? So there's a payment request, obviously, from the accounting clerk side. So that purchase requisition has to be authorized by a senior authorization function. All of these details I'm giving you, you find it somewhere here. As you go through this, they do explain that there has to be at least two designated personnel appointed to do the authorization. Once the authorization is confirmed, guess what happens? Then a check, remittance advice to the supplier is sent, all right? So a remittance advice is almost like proof of payment, you know, indicating that, look, we've paid. So here's the remittance advice. That's proof of payment. So of course, that can only be sent after the payment has been authorized and initiated. Right? And then we record the payment in the accounts department. So that was to explain and to summarize the flow of documents with regards to payments and recording of credit purchase. Then there's a last stage to this particular cycle, and I call this the sixth stage, and it's called goods return stage. So sometimes it's not all the times that you'll be happy with what you have ordered, okay, in terms of physical goods. And one of the reasons that could cause returns of goods, it could be omissions of records of goods. All right, I mean, so there could be omissions of goods. So it could be that the goods are not of standard quality expected by the organization. So what do? Obviously, we'd have to return the goods back to the supplier. So essentially, the primary objective, it would be to ensure that damaged or defective goods are successfully returned to the supplier. So returning of goods happens if the goods are damaged or defective. If they are defective, it simply means that they cannot be used. They cannot be profitable to the organization. So what do? We return them. So obviously, the only way we can know that they're defective or they are damaged goods, it will be if there's a report from the warehouse department saying, look, of the goods received on this day, out of the 20 boxes received, 2 boxes contained damaged boxes, and those 2 damaged boxes had to be returned. All right. So when they were returned, so what documents did you guys use to record that detail? So in the process of recording returning of goods, we use what we call debit notes. So a debit note is what we record, initiate as the receiving company that are procuring the goods. So if we're not happy with certain goods, we write or we document a debit note. Okay, so that's why I'm saying here in this case, it is initiated by the creditor's clerk in our company, in our organization. Then what happens? That debit note will be sent to the supplier. When the supplier receives it, together with the goods that are defective, they will match the goods to the debit note, of course, in the other accompanying supporting documents, before they can generate something called a credit note, which they would send to us, all right, as confirmation that they've received the goods returned, which were defective, okay? Then, of course, like I mentioned, then the moment we see that there is returning of goods, it also follows our accounting records will be affected by that. That is why there's such a thing called purchase returns journal. It's for that purpose. So that's why you see the purchase returns journal will be affected, and that will automatically also affect our ledger accounts, and of course also affect or influence our inventory records. Why? Because initially, if we had said we'd received 20 boxes, it's no longer going to be 20 that we have on record or that we have on the grounds now. So we have to make amendments to our records. If we initially captured this, we've received 20 boxes. So it will be now 18, only after we've updated our inventory records. Then let me show you a flow of document from page 168. The department involved normally is the warehouse and the accounts department. So here is the flow of documents. Notice the warehouse, what do they do? When they are receiving goods, all right, they will be able to identify goods that are of inferior quality. And by identifying those goods, guess what would they do? They'll communicate with the accounts department, and the accounts department is the ones that are going to generate a debit note. So it's not the warehouse, but it's the accounts department that will generate or that will prepare a debit note, which is distributed as follows. The original is issued to the supplier, informing them that, look, the goods that you have delivered, these goods are not of adequate or appropriate quality and standards. So we are returning these 2 boxes because they are damaged. Then that's what the information there will be. That will be conveyed in the debit note issued to the supplier. The same detail is also contained in the copies that will be sent to the warehouse. So the one that will send to the warehouse in this case, it will be to update them that the goods that you confirmed to be of inferior quality, we have returned them to the supplier. That is why there's this copy sent to the warehouse of the debit note. So guess what? They'll also use that in the warehouse to update their inventory records. So they will be able to know, okay, of the goods received for this particular day, there were 20 boxes, but of the 20, 18 were of good quality, but the other 2, they were not of good quality, they were returned. Then they'll update their inventory records by virtue of having received the debit note. There's another copy that is sent to the accounts department. Remember, there is also accounting records that will be affected by virtue of this particular event. So what would happen? We have to update our accounting records, and that is where the purchase returns journal would be recorded, and also the effects to the ledger accounts and you know, other related accounting records. But remember, from the supplier, what do we receive? We receive a credit note as confirmation of what it was created by the creditor's clerk. Okay, so we need to have that attached to the debit note in order for us to put a record in the purchase journal. Are we still together? Are we still together?
Yes,
I know it's a lot of
yes,
detail, I know.
it is a lot of detail, Privilege.
Yeah, and I'm just trying to summarize it as quick as I can because it's a lot. It's a lot. But what I can do, because I know I've already given you the high level, the blueprint of the 6 stages in the cycle. But what I would cover is this. But I would rather do this as a separate lecture session. So what I would do is I would do this as a separate lecture lesson, and then I would also take you through a practical discussion question so that you can see now the connection of this to actual practical questions. So that's what I would endeavor to do in our next lecture class next week. Is it okay?
Yes, it is. So one should first understand
Mm-hmm.
the entire cycle before you can look at a question then as well.
Yes, you definitely need to. You definitely need to. You'd see with the type of questions that I'll be taking you through, most of the times you'll discover that there is always a cycle that they are looking at. Let me just show you one assignment from last year, just so that you can. But I also did the same thing in the orientation class, but I want to just make sure, you know, you can be able to see some of these things. Okay, let me just check maybe 2022. All right. Let me just use one assignment, just at least an assignment. So this is, I think, assignment 3. Yeah, it's assignment 3 of 2022. So I just want to show you the kind of questions they would explain to you, right? All right, so this particular question, it was dealing with theft or fraud. All right, I'm also going to teach you about fraud and stuff, but let me just go to the top part so that you can see what was being dealt with there. What are they dealing with in that question? Is the what? right in front of you in question 2.
Acquisition and payment cycle,
And what am I dealing here?
the same cycle.
Same cycle, exactly. So for you to have answered this particular question with better understanding, you needed to understand the blueprint behind the cycle so that you can be able to pinpoint that, okay, in this case, for instance, something is going wrong here because, okay, these 2 buying officers who negotiate prices with suppliers and place orders. They also follow up in order to ensure that they are received. But is that really how it's supposed to be done? The people that are placing orders, they're also the same people that are authorizing it. It's not supposed to be like that. Why? Because there's possible misappropriation of company resources since the 2 buyers can actually order goods for their personal use. Why? There's no one overseeing what they're doing. They're the ones who have got the ordering or authorizing powers in this case. Another way is the purchase of goods can be affected can be effected at unfavorable terms to the company. Why? As the 2 buyers are involved in price negotiations with supplier themselves. Meaning to say there's no supervision, meaning to say that there's no pre-approval, or so there's no pre-approved supplier list in place, right? If there's a pre-approved supplier list, the pre-approved supplier list would help us. It can only be compiled on the basis that prices are already predetermined. So we can put a supplier on our list on the basis that we already know how much they are charging and whether that amount falls within our budget as a company. But in this case, it was not taking place. But how can you know this? You can only be able to know that if you understand what is supposed to be in place when dealing with a acquisitions and payment cycle, or purchase and payment cycle in that case. That is one of the reasons why I'm teaching you guys business cycles. But now, that was question 2. Let's see question 1. Let me see what they were asking for first. Yeah, you see that? Study the above scenario and develop risk and control metrics of the what? The human resource process. The human resource process, it refers to this particular cycle. Am I making sense?
Yes, you are.
Yeah, so it relates to that. That's why I'm teaching you cycles. Why? Because I know there's always something about the cycles that they'll ask, and these are the things that they're asking for. So for instance, in the context of question 1, they asked you to identify risks, and at the same time, they ask you to recommend internal controls. And that's exactly what is happening in question 1.1, where they say, study the scenario and develop risk and control metrics of the human resource. So in other words, what can be going wrong in the human resource process of this organization, and how can they correct the condition that is taking place there? And that's where control measures come into the picture. They can also ask you for audit procedures to do with recruitment. Now, for me to know audit procedures, it's part of the things they can ask with regards to these cycles, and that's what you see over here, where I'm saying draft audit procedures. So that's why I'm teaching you cycles, because I know they test about them. So we're going to be looking at that assignment question, question 2 to be particular or precise. That's what I'll take you through after I'm done with this cycle. That's how I've planned it. So next week, I'm going to conclude on the purchase and payment cycle, and then we're going to look at this assignment 3 from 2022 academic year. That's what we will be looking at in lecture number 2 from next week. So what I do is, the idea is we finish the blueprint of each cycle. We do one question or one example at least. Then the other week we'll be introducing another business cycle, and then we go to a practical question again, something of that nature. So that's how I'm going to try and cover on them.
So in terms of the fraud question specifically here, are we still covering that part, fraud on its own?
Yeah, fraud is a concept.
To be able to answer 2.1 there.
Correct. Yeah. So what I would do with fraud, I'm going to teach it as a concept. There's notes already that I have compiled on that. I'm going to share them with you. It's from a study guide, but I've already done some footnotes on it, which I'm going to share with you before next week before next week, Thursday. I will share those notes with you so that at least you can, you might need to do a self-study on it for now, but I'm going to teach in detail about fraud. It's one of the simplest concepts to learn or to deal with in the module. But for the sake of ensuring that when I'm now discussing about question 2.1, at least you've got some bit of light. Because I didn't want to mix the concepts all together, because I knew that it was gonna sort of like mix up with your head. So best would be to maybe give you the notes on it, just on fraud, just to gain light about fraud pertinent to this particular question. So that's what I'll do for next week. And then we look into this question. Okay, any other questions?
No questions.
That's it. All right, perfect. Now, if there's no any other questions, thank you so much, Miss Natalie, for your time. Much appreciated. So I would look forward to seeing you soon for RSK over the weekend. So for this module AUI 4863, we are done for the day.